We're going to take a look at the condition of the markets here today and, more importantly, looking forward. But I want to really focus you on how you can focus yourself, actually, on scanning each day, how to really zero in on what matters and leave a lot of the noise behind. I think that that's, in my trading, one of the biggest issues that I face is that, you're getting so much information piping through to you every day. Whatever type of trader you are, whether you're a day trader, intraday, whether you're a swing trader over multiple days, position trader over multiple weeks, you've got to have a way to filter things down into what really matters. So I'm going to show you what I think matters, and then we're going to go through a number of examples. So basically, just a quick reminder, of course, that everything I share with you here today is for your information and education only. Nothing I talk about, even as I look at current market scans and setups, none of it should be considered a specific buy or sell recommendation. I'm always concerned that my folks that are new to big trends in my philosophy don't understand how to get out of trades, and getting out is just as important, if not more important, than getting in. So we're going to walk you through how the entry sets up the right type of profile, and then how to manage trades from there. Ultimately, you know that you are solely responsible for your investment decisions. Here at Big Trends, our staff and myself are not responsible for any trades you choose to make. We're about empowering you to make better decisions for yourself over time, knowing that, hey, there's going to be losing trades. You got to know how to manage the losses and then how to get more out of your winning trades too. Not all Big Trends and products or services are appropriate for all investors, and we don't provide any personalized financial, tax, or legal advice. We put all of our alert services out to everybody at the same time, then you decide how you want to use it. I do consult your tax advisor too before you make any investment that's going to impact your unique tax situation. Okay, so we're going to talk, like I said, about focusing you. How do you get focused on what matters? Best of the best type of opportunities, the right kind of setups. I'm going to share with you today my top 3 indicators and scanning tools that I use every day and throughout the day, and walk you through a number of examples on our Big Trends scan setup, how you can put these indicators to work for you, and what is the market outlook for the rest of the year. So we want to talk about that in particular, and I think it's actually a pretty good opportunity to, with the volatility we saw today in the markets. I'm going to actually jump into a chart. We're going to kind of go back and forth between the charts and some overview on the things you need to understand and learn about. But let's just jump in on the S&P right here today, because it was really kind of an odd day. We had a gap down, then we had a big recovery of the early losses, then we had a late day sell-off. In fact, if you looked at the intraday charts, you'd see kind of just how all over the place it was. The gap down, the prior guest was talking about, buying into that, but then of course if you're quick with that, that can work, but the bottom line is that if you're wanting to kind of ride a trend, those counter trend moves can be tricky, because then of course, the downtrend really kicked into play in the afternoon. So, those who bought the open, if you weren't nimble, you'd given up those gains and more by the end of the day. So time frame. So, a lot of different ways you can take advantage of the market volatility. You just have to know how you manage your risk through the process here. So, pretty choppy day in that context, although we did get kind of a late breakdown signal here. I want to talk about how we're getting these signals in a bigger picture context here. And what I want to do is actually zoom in on this year, 2016, and show you both a bear example to start off the year and then a bull example as we're looking across some of these indicators, like the percent R, which is a Larry Williams indicator, the second panel, the CCI average, which is the commodity channel index, kind of a confirmation tool I use. And we'll also talk about acceleration bands as another tool that I developed to help people find new opportunities. Now you can see, if we just start with percent R, we actually show you kind of visually in these light blue bands, these show you where the percent R overbought and oversold levels were on the classic 80%, 20% kind of a threshold. That's what shows up on this middle indicator here. When we went overbought on the market coming out of the prior bear move, and we'll come back to that in a second, but you can see this latest move that we just had, we started to break out here. I don't buy just when something starts to break out. It actually has to show me that it wants to keep going up. I call that confirmation. So that first overbought setup happened back here on the S&P SPY, tracking the S&P 500 index, back on February 22nd. That high was 5 pennies under 195. I need to see it close above that. You see, initially it kind of failed, but then third bar in, third candle there after that setup, it can close over that 195 area at 195.54. So that's the confirmation at the close. We actually have our systems tested based on assuming if you see something that closed, you couldn't get in at the next morning's open, well, then you're entering there at the next morning's open. And initially, you see you're getting a little brief pullback, and then the bigger picture trend is kicking into gear. And so, we look at a lot of different things here, but, look at how long this percent R, the big trends way, to Larry Williams' percent range indicator, how long that indicator can stay in the overbought top 20% of its readings. In fact, when it retests back into that 20 percentile level, you saw it right away after that buy signal the next day give us a test under that 80 percentile level. Then it bounced. Got another test of that back here on April the 7th, around 203 on the SPY, and then got a quick shot up to 210 here. And then look, we were having another retest this past week. You can see back actually on Monday's low. Monday's low was 207.54. Well, guess what? Today, after bouncing about 2.5 points, and then you see what happened today, we actually closed below 207.54. That's going to signal a violation of the last 2 months worth of uptrend, which means that now it's time to exit those bullish positions based on the percent R methodology. I'm going to share some more details with you about it. Now, does that mean you go bearish here? No, it doesn't. It means that we're moving out of the uptrend phase, and we're basically moving into a more uncertain phase, basically moving out of trend into potentially range-bound action. You can make a case that, yes, the upper end of that range now is around 209. The lower end of the range is around 203.5, give or take, which makes some sense, right? Back into these recent lows here, 203 to 204 range, whereas when you think about the high that we made just under 211, as you come down, obviously, say about 20%, if it's about a 10-point range, that tells you that you're looking at something about a point at a time. 2 points down takes you to the 80th percentile. So that's why 209 makes sense. It's sitting at about the 80% overbought level here on that chart. We just kind of have a way to visualize that. Now, the other tool that I launched BigTrends.com back in 1999, and so the one I really want to share with you here today is actually walk you through the acceleration bands. So the acceleration bands, I especially like it on individual stocks, and we have all these tools available in our Big Trends toolkit. You can see we went through a classic acceleration phase right after that percent R buy signal. 1 and 2 bars outside that upper purple boundary happened at 199 on the SPY. You can see that was plenty of meat left to trade this remaining move. But you see, the best part of that trend was as we just started to really accelerate from 199 to about 205 over the next couple of weeks. As we broke back into that band, now that band formed just some resistance. And you saw we ran into it back there about a week ago and kind of stalled out. So, and you can see, though, in comparison on the downside, when the market actually started off the year, you know what happened this year. We gapped down to start off the very first trading day of 2016. And from that perspective, you saw that we then kept on breaking down here over the next several bars. When we close below that level, that's a percent R sell signal. It's also confirming the acceleration below the lower purple boundary. Guess what? That's where markets can tend to waterfall or free fall on the downside when you're really losing all that prior support. You can see one close outside of that band on the downside didn't actually materialize. I always say it needs to get 2 closes on the acceleration band. That happened on this second bar here on January 8th's close, confirming right behind what was the percent R sell. And then the CCI, that shows you magnitude. That shows you how much strength of movement you have. I look for that to break outside of this plus 100, minus 100, sort of a range-bound threshold, and you can see that also confirmed a couple bars later there on the 7th of January, 194. And again, the best part of that downtrend was over the next week and a half to 2 weeks down to January 20th low at 181. Now, the other thing you're going to want to know is how do you get out of these trades. I showed you the retest when it violates like we just had today. It doesn't show today, it's going to show at the open tomorrow, but essentially it's a done upside trade. You're no longer bullish based on percent R because of the close just underneath. It doesn't have to happen by much. Even a 1 penny violation at the close will tell me to get out. I don't like to use intraday or intrabar types of stops. Otherwise, you can get in a position here in which you can definitely run into some trouble there. Now, I want to also, I've got my lead consultant in Chris there. I want to help because you may have some questions as we go through here. I want to get him a quick upgrade as well, just because he can help answer some questions for us along the way. So basically, if you have questions, feel free to type them in. We'll do a little rapid fire session too when we're done, and Ree can remind me how much time I've got today, so I don't want to go too long, but I do want to give you maximum bang for your buck. Now that you're starting to understand, I hope, some of these principles. So in our Big Trend Scans product, we've been picking up bull and bear opportunities galore here in 2016. And so when I think of, for example, a stock that's been really good to us on the downside, even when the market was rallying back up over the last few months, you can see, look at a stock like Valiant, VRX Pharmaceuticals. They just announced a new CEO coming over from Perrigo. The company's been very embattled here over the last 6 months. You can see that and by the way, Valiant had been a monster on the upside too. You can see the prior year's action, you wanted to be on the bull side. You can see some of the accelerations, phases, the percent R breakouts. And look at how long, again, in a good trend that stays overbought, guess what? This year it went the other way. In a bad trend it stays oversold a lot longer than you'd expect. Now, one of the things I want to highlight for you is that, yes, there's the initial breakdown phase, but then you also note that there's also what we call the retest phase. Now, the retest phase means, a good example of that would be like this latest move. We were calling it out here back here in mid-March in our Big Trend Scans. Let's zoom in on that for a second. You can see as we had broken the acceleration bands, we kind of retraced back up inside of those bands briefly. Look at that little percent R, little jagged move up there on the 11th of March. We call this a bearish retest. Once we've broken down on that prior down signal that happened at the start of March, if it retraces and has what I call a retest back into the in this case, oversold 20 percentile level. Remember, I want to see something stay in the bottom 20% if it's going to stay a strong downtrend. I used to use stochastics to do this kind of work, but I found that stochastics typically don't give you as many retracements, as many retest points as a percent R does. And so in my work, that retest is a wonderful low-risk entry. If you've been following this collapse of this stock and you say, you know what, it's coming up on our scan as a retest situation, well, then the bottom line here is that that's a key test point there on the 11th. Now, what I want to do real quickly is I want you to even zoom in a little closer with me, because if you look at on the 11th, that high there was 69.66. And by the way, this applies whether you trade stocks, futures, forex, ETFs. Pick your poison. The indexes, any given trading vehicle, you need to understand this market structure between trending markets that I care about and range-bound markets that are kind of slower moving and thus a lot of noise. So I can then customize an option strategy. I don't care if you buy options, do spreads, collect premium, you name it. If you know which way the trend is headed, you've got a major advantage that I want to highlight for you. Remember that number, 69.66, because I'm telling you that that is the retest number that should not be violated. But the key is it shouldn't be violated on a future candle or bar's close. So 69.66, the very next day, look at where it trades up to fairly quickly right off of the open. It goes above 69.66 at 70.43, and you say, Price, you're going to get stopped out there, are you? And I say, no. If you follow my rules that hopefully you're going to continue to learn throughout this process, it's about continuing education. Never consider you've learned it all. 25 years of trading, I'm always looking for the next edge. One of the edges for me is don't get whipsawed like everybody else. Wait for the close of that bar and any future bar. If at the close it finishes above that retest high from March 11th, this is on Valiant, VRX, 69.66, if it closes 69.67, I'm done. Or higher. And you can see what happened is it traded above that 69.66. Look at where it closed on that bar. See the red candle, it flipped back down by the end of the day, 69.04. So we call that a bend but not break. What's happening there? A lot of you who place your stops intraday or intrabar are getting whipsawed, faked out from what the true trend is, because you think you're protecting your capital, but you're just actually getting noised out of the trade. Anybody, just a virtual show of hands, anybody ever had that happen? You got whipsawed out of a trade, it quickly flipped back in the direction you thought it was going to go, and your just intraday stop ended up kind of backfiring on you. Yeah, Mike, I'm raising both hands right now. I can relate. I was there in the early days of my trading. It was with my own capital that I grew it in the mid to late 90s to actually start BigTrends.com in November of 99. But so I was learning those lessons the hard way to make sure that I was going to grow capital and not get whipped around. So Lawrence, you can relate to that as well, I know. Bottom line is that that's a retest, but it's a what we call a bend but not break. It's a test. It's kind of like in defense. When the defense gives up some yards in a football game, they let the offense go down, and then the offense ends up getting picked off, or the defense holds and doesn't allow that other team to score any points. The defense has been said to bend but not break. Okay, so it's the same idea with the battle that's happening. Let's zoom back out here. The battle that's happening between the Bulls and the Bears. The Bears have the ball. The bend but not break. The Bulls take their shot. The Bears hold on to the ball at the close, and guess what happens? The very next day, all you that got flushed out by that intraday noise, bam, that very next day the stock goes from 69 to 33. Okay, you look at that and you say, how is that possible? Well, it's the interplay between the trend structure, which is clearly still bearish, just don't get shaken out. And we will get shaken out of basically junky trends that don't develop like we thought they would. So we're going to lose on some trades. I'm not just trying to say, we hit every one for a 50% decline in the stock the next couple of days. But in this case, our scans picked it up, and in the next few days, we were seeing the stock down 50%. Now, of course, with options, you can turn that into something even more dramatic, where you should be on a 50% move down the stock, making well over a double, even on a fairly conservative option. Usually we're looking at kind of 10-to-1 type of leverage ratios in the options purchases that we tend to recommend. The other interesting thing about this chart, by the way, is notice what just happened here. Valiant actually had a retest again right back here on that high of the 22nd. And I believe they announced the news of the new CEO at the start of the week, and it gapped up initially, but look at what happened. That retest, 36.49, it traded above there to 37.90. Look at where it closed, 35-ish. We've tried 36.43, 36.67, and today 36.26, and it can't get through there. So even though it looks like percent R is shooting up, for now, the retest is still active as a bearish situation at 36.49. Now, I'm not making recommendations here, but I'm just showing you chart structure and the kind of things you want to look for. Now, obviously, it's not as strong given that we haven't been outside of those acceleration bands for about the last month. At that point, the acceleration band on the downside near 27.09 would be my target if I was trading this off of a retest back down. And of course, I would stop if it had a close above that 36.49. Just walking you through structure. Compare that to, say, a stock over the last few months like McDonald's. We've been talking with our Big Trend students about the weak dollar and its impact on a lot of the big multinationals. McDonald's makes something like 3/4 of its profits from overseas. Guess what? When the foreign currencies are strong, that's even better news for a stock like McDonald's. You can see on past breakouts like last fall, if you miss that first move up, guess what the percent R retest does for you? And the CCI also shows a retest back here a couple times later. The retests give you a spot back on the horse. So you can see, and sometimes it happens right in front of a big gap move. That was an earnings-based move. We tend not to recommend buying right in front of earnings just because you pay so much for the options. But you get another good earnings reaction up. Guess what? We don't try to buy the gap up as much as buying the retracement. Look at that retest on Mickey D's, just under 110. And again, it has a bend but don't break. If you put an intraday stop in below the prior day's low, you are often going to get whipsawed. That one goes quickly from 110 to 114.5, 115. But you see, it's going to go all the way with multiple retracements here up until it finally ends. The last retracement stops out on the close below there here and gets you out at 117.41. From an entry on a retest, just around 110. So, that's like a 7-point pop to the upside. You can see I'm wrong on the next one here. You buy that retest right here at 121.5, and you can see that the next day it's going to close under there like 120.5 roughly is getting out 120.65. You lose about 85 cents. Again, if I lost a point and I can make 7 points, that's a 7-to-1 reward to risk ratio if that happened regularly. You can see this next move. We got the breakout there. You see the first retracement. We're getting a retest back there, especially intraday. If you're paying attention, those intraday retracements happen in the 122.66 to 123 area, and the stock moves up to almost 130, goes to 129.80. Again, up almost 7 points, $6.80. And when it finally exits, you can see it's not quite as profitable, up from 123.25 to 125, only up about $1.75. But the point is, getting on the wagon for these moves that a lot of you have been missing out, the retest strategy will give you many opportunities to go back and start participating in that again and again and again. And that's what we're after. We're looking for that kind of consistency here. Now, one of the things I want to do is I want to actually pull up my scans page, and we're going to walk you through how the scans work here as well. Before I do that, though, I know I jumped into some charts. I want to give you a little bit more overview and background about what we're actually, zeroing in on here. Okay, so let's go ahead and let me pop back over to my PowerPoint for just a sec, and then we'll take a look at that as well. Okay, now when you pop over here, you say, okay, the scans, what it's all about is getting focused on the best of the best. That you've got to have a way to weed out. Of the more than 4,000 optionable stocks and ETFs out there these days, how do you get to a handful, just a few at a time, that you should be focused on? And so, my objective is to say, okay, what indicators matter? So which ones give us an edge over a longer period of time? If we know we have a trading edge, then we should be able to, really zero in on the best of the best kind of situations, and we should be able to leave a lot of the other junk behind. That's what we're really after, is the best of the best and leave the rest. Okay, now, from this perspective, we'd say, okay, clearly we need to make sure that we're managing, our risk through this whole process. I see a lot of traders who know how to make money, but they also too quickly will give that back. And so, my objective is to say, let's make sure that you're not going to, put yourself into that kind of a position of working hard, building up your portfolio, and then giving it back all that much more quickly. So, clearly we've got to have a way to say, what's the top trade look like? And when it's no longer a top trade, how do we get rid of it? And then what's the best stock or an option strategy to trade that? Now, from my perspective, there's always a bull and a bear market happening somewhere, especially with the individual stocks. That you should know that you need to be paying attention on both sides of the market. Even with the run-up we had recently, you've seen stocks like Valiant plunge in the meantime. And so, of course, in the ETFs, you'll find a lot of the sector moves, a lot of the commodity moves, and you've seen oil. We want to look at oil. Oil's picked up quite a bit here over the last, in this case, roughly few months. And so you say, okay, we want to show all opportunities to our scans traders. It can actually show up to 48 different opportunities in each scan, but I say that's too much. I say, let me give you the top 3 summary in each scan of my favorites, of which ones I think are good liquidity that can be traded easily. So they're going to be mostly the big names that not a lot of little names that you never heard of, because then, I don't want it to be you against a market maker in an options trade. I want it to be you against a lot of other options traders where you can create an even more sustainable edge over time. Now, as I mentioned, the big 3 that I'm focusing on, I use a lot of different techniques, but the big 3 that have really made the biggest difference for me are my acceleration bands, helped me to accelerate my portfolio to launchbigtrends.com in 99, and then the percent R, Larry Williams indicator, the percent range, but tweaked the way that I showed you before, and then the commodity channel index developed by Donald Lambert, but again, looking for the really unusual strong moves and leaving those rests behind. So let's go in for a second and just take a look at what a scan would look like, so you can start to get some flavor about, okay, if you're setting this up. We like to use TradeStation's radar screen. You don't have to have that technology to take advantage of this information, but it's certainly, if you're doing it yourself, to me it's one of my favorites. And again, you can do this also on Thinkorswim's platform, now part of TD Ameritrade, and Metastock's another one we have our toolkit available for. You can see right here I actually have it set up for the 60-minute for starters, but I'm going to actually say let's first take a step back and focus on the big picture daily. You can move from the bigger picture daily trend down into the shorter term trend very, very easily. And so, from this perspective, what's all this data that I have up here? Well, what I do is I say, what, if you want to look for a percent R bullish scan, show me the leaders on the upside. Now remember, percent R cannot trade above the 100th percentile. It's just saying where's the stock closing today relative to its recent range. And and you can see there'll be names that'll be acting like, here's one reacting to earnings, LinkedIn. You can see it jumping around after hours here, up about 9.5 points. Notice The yellow setup was happening today as the stock was firm, but that was not strong enough to suggest that we should be doing anything in front of earnings. And we tend to be a little bit more conservative and kind of wait for that sort of shakedown to happen here. But the ones that I want to point out to you here are the metals. Look at what's going on here with a new re-signaling here in the gold market and and also, well, actually, in particular, even before gold, you see gold just broke out as a setup today, but the one that broke out before that was GDX. Yesterday's close, 1 bar ago is what that says. 1 bar ago, GDX went to bull confirmed status. And some of the other ones, like some of these leveraged ETFs, that's a 3-to-1 on the junior miners, the GDXJ miners, which is right up here, by the way. The junior miners are even stronger. They also broke out. So quickly, what we can do, we can kind of oscillate back and forth here and say, so show me the charts here and show me what I'm looking at when I look at GDX or GDXJ. These are the gold stocks. Well, guess what? They were telling you that you're getting a major acceleration breakout, a major %R breakout, and look at that CCI, that big surge that was happening there through that overbought threshold at the start of February. These things absolutely exploded for the month of February and kept on kind of ratcheting up with several retest points even in March. Quick snap up, but you can see more recently, look, got that breakout again, look at that, retest 1, another little retest 2, and a retest 3 right there. So you've had 3 different points to hop on, and now it's zooming back to the upside. So am I telling you to chase it here? No, but I'm telling you that, if you pay attention, that's where the money flow is happening, folks. Of course, gold, the broader gold bullion ETF, GLD, big surge that happened to start off the year. But what I want to pay attention to is, look, you have an acceleration signal and a %R signal, but what you don't have on board here is the CCI signal yet. The CCI signal didn't really confirm until it got one high there and then a close above that high at about 107.69. So if you're buying into this first retest here at the end of January, you actually are in a better risk-reward structure than here where you're kind of waiting for CCI to come around and never does and you get a quick stop out. Now, I don't mind even if you said, look, even if you bought the breakout there at 105.5 and you stopped out at like 104 or 103.89, it's like $1.60 that you lose on that trade. Call it $2 even. This next trade you see from the entry at 107-ish goes to 120 of about $13. So again, that's like, potential to 6.5 to 1 risk reward versus risk. Right now, what's happening? We're just now, literally all 3 of the indicators, we got a close above the acceleration band, but just one. We got a %R above the overbought threshold, and we got CCI back above its overbought threshold. That means that today's high, just under 121.5, has to be eclipsed on the future close, preferably the sooner the better, tomorrow's close. But this it can take up to 5 sessions for that to happen, or 5 candles, depending on what time frame you look at. I know I'm going kind of fast because I'm trying to cover a lot of ground for you in a short period of time, but the point I want to show you is, look, there's opportunity there still in the yellow metal if we can follow through above that. And I would suggest that, certainly it looks like that the leadership, even compared to the gold prices themselves, let's look at GDXJ. The leadership's happening. Look at how powerful that trend has been. The leadership's happening in the stocks. These are the junior gold stocks, the smaller capitalization stocks. They're doing even better. So when the stocks move before gold prices, that's usually a pretty good sign. And you can see it got bull confirmed yet again here as it's had several moves through this latest stretch of massive breakout without a whole lot of give back either. You can see that's been a much steadier profile. So that's certainly a leader in our view if you're looking within the metal sector. You saw silver was up there as well, SLV, and silver just the first time when we broke out in February, it kind of didn't get going as well as gold. But this latest move, it's actually really started to accelerate. There was the follow through on both the %R and the CCI, and then the acceleration bands happened the very next bar, silver at about $15.50. And now today we're $16.77. Again, if you're converting that, let's talk options for a second. If you are converting that into an option trade, if I'm looking at a daily chart, we tend to tell our students, look out to the next month, about a month away's expiration. So here we are in mid-April, buy signal April 13th. The May 20th monthly options is going to be where we're looking, about 5 weeks away. The key is don't buy the wrong option strike. when you go in here and the stock's trading about, or the ETF's trading about 15.5, a lot of people make the mistake and buy like a 16 call out of the money. In this case, you might get paid for that. But, you know, a lot of times if it flattens out, it may chop you up or stop you out before you can actually start to cash that trade in. We tend to recommend something a little more manageable, like say an in-the-money, say a 14 strike. If we're 15.5, that's about 10% of the money. Let's just look for a second. Remember this horizontal line back there on April 13th when we're getting that signal. Just for a frame of reference, if you were looking at the May in-the-money 14 calls, and you said, hey, back where that line was, you can see those options were trading at the end of the day at $1.53. Now, remember, a 14 call, it was worth almost $1.50 intrinsically, and it's finishing at $1.53. That means you're paying next to nothing in time. So when you get that next surge up move, you can see that $1.53. Yes, it had a brief little sideways move there, lost just a hair, not much, went to $1.43 at the low over the next few days, and then bam, the gap up. And then the latest move today back to 275. You know, we'd probably be saying certainly if you're still on that trade, if it gets a little more follow through and you can cash in the trade at a double, you should always sell half of your trade at a double no matter what, in my view, because basically that's getting your risk capital back out of the trade. So you're going to allow yourself the ability to really take advantage of these best of the best trends. Oh, by the way, that's called an option chart. That's the May 14 call. Do you notice anything happening on the option chart in comparison? Well, notice how we tested underneath the acceleration band, one close, and tested in the upper band, then tested the lower band, tested below it briefly, then flipped back above, and then 1 and 2 closes follow through above it. That's where, right where we were just talking about with the underlying SLV instrument. You see the acceleration pattern for the option chart. If you want to buy an option, that's where you'd like to focus if you're an option buyer. If you're an option seller, guess what? When SLV is trading at 15.5, you might be thinking, well, instead I could sell the 15 strike puts at that same interval there. Well, look at what those have done from April 13th. You can see, well, those are only 32 cents. Maybe you're doing a spread or something like that, and you see they've gone from 32 cents down to a bid of 4. Ask of 5. You know, so the point is that there's opportunities on both sides. I like the straight options purchase if you're looking to get more bang for your buck, at least on the more growth-oriented part of your portfolio. And then if you'd like to sell options, you can do credit spreads as well. Now, let's come back in here for a second and just kind of overview a couple of things here. So what it looks like when we send out these big trend scans every day, we send them out after the close so you can be ready for the coming day's action and really take advantage of it day to day, is we send it out at 6 p.m. Eastern time, and we summarize all those scans and all that hard data you just saw into something that's a little more manageable for most people. It's kind of like the best of the best. So, you know, again, we're putting this stuff through a filter, kind of like if you were sifting for gold nuggets back in the old gold panning days in the gold rush era. You know, the idea is you better have a fine enough filter that, you know, it won't let the good stuff through, but not so fine that it's going to get gummed up with too much mud and gunk there, right? You've got to have a way to get rid of all that noise and all the kind of worthless stuff in order to get to the stuff that's left having the value. And seeing the gleam on those new trades. You know, the bottom line is that, you know, so we'll typically, you see they're big names. This was back in the past month. Oracle, Intel, Alibaba were a couple of 3% of our bull trades. On the other side, we had AZN, a stock called Line, and then Chipotle. And, you know, Chipotle, of course, is one of those that's been, you know, all over the news. And, you know, it's been one that, you know, you have to pay attention to, you know, not just the news itself, but also how the stock reacts to the news. So that's real important. Remember I mentioned on the acceleration bands, you see down here, VRX in the bottom right. That was one that kept on coming up on our scans back there mid-March. So, you know, we'll walk you through which ones are showing up. And what it looks like, by the way, when you actually get, then you get access to our scans, is it'll show you, let me go into that in just a second. It'll show you, like, for example, some of the past months, you know, trading scans. You can see there's VRX is the biggest one. Not surprisingly, you see how the short signals have the potential to really collapse quickly. If you catch it right, we know that stocks can fall a lot faster than they tend to rise. Whereas the longs tend to be kind of slower and steadier. And then you see some of these can happen in a day, some can take 2 or 3 days. VRX took 3 days. But the point is that we're looking for that kind of leveraged stock move to then get even more bang for our buck in the option trade. Now, the basic premise here is that, okay, if I'm going in and you're looking at some of our recent scan results, some that popped up. Let's actually look at what the scans look like real quick so you can see that first. Okay, so once you become a subscriber, you would get access not just to our email updates, but then also you get access to these recent day-by-day kind of summaries of the entire scan process here. So, if you were looking back, say, to Friday's close last week, okay, so let's go there first, give it a few days to kind of look at this. You'll see that we'll summarize the top %R bullish moves. You see Schlumberger, there's Alibaba still on the list. And so, you're looking across those kind of moves. And what I always encourage my students to do is to pay attention to the fact that, if we're coming right off of a kind of a retest scenario here, or getting near a retest scenario, that can create some really nice opportunities. So let's just even start at the top, Schlumberger. We said, yes, it's breaking out back there, it already broken out once. You saw a retest right there. If I'm telling you it's breaking out again here as of the close of last week, if you are patient and just pay attention to what I'm teaching you here, look at what's happened in the very next bar. You've seen the initial acceleration breakout. You got the CCI moving, you got the %R, and then you get a %R retest right there. Stock trades down to about $78, and it finishes about $78. So well, it actually bounces a little bit, 78, 77. I'd probably be pretty conservative with something like that, but if you're just converting that into an options play, we're just under $78. We'd be going out typically to the next month's options, the May options, May 20th in this case, and we might be looking at something like a 75 strike call when the stock was finishing close to 78. You can see that option closed at $4.50. You say, gee, that's a little expensive, $450 a contract, 4.53 to be exact. But notice on the option chart what's happening here. You catch the first breakout, now you're going through the normal retracement or retest, and from $4.50 it got up as high earlier today as 6.5, finished back around 520 bid. But the point is, look, if I can go from 4.5 to 6.5, that's giving you a chance for a near 50% pop and a fairly conservative option. Remember, if it had 3 points of intrinsic value and it's trading at 4.5, that's about 2/3 of the option is intrinsic value and about 1/3 of the option is time. That's about the minimum standard that I would make a trade. If I can get at least 2/3 intrinsic value, then basically I'm going to be moving to an even more in-the-money option choice. But you also see what's happening here. Look at the CCI for a second. When CCI just hits up into the overbought plus 100 level right here back in early March, you see how it didn't follow through above that high on March 7th. It's kind of stopped there and faded. So even though %R looked like it was trying to break out, the CCI didn't come along. And in this case, you see the CCI didn't come along on that initial move, so we actually had to wait until it broke out through that next high, which happened above $4 here at about $5.25. So now you're getting that thrust, and then you're getting the retracement. And if you pay attention, again, it's one of those that patience gets rewarded in the markets. It's just about knowing what's breaking out and then watching for the next retracement or retest. So that really makes it a lot more effective. Let's go back over for a second and look at what else was popping. So we've mentioned Alibaba a couple of times. Obviously, Yahoo is let's also look at one that didn't work. Here's Alibaba from April 22nd. So let's just say you're waiting for a retest, which happened right at the close, actually, on the 22nd. So you had a real volatile kind of a bar there, and it closed near the low end. 79.16 is our number. It should hold that. We're within 1% of that, which is my rule for a %R retest entry. So you could buy up there just under $80. And you see what's going to happen. You buy it there, the next bar's open, 79.80, and then it closes down about a point at the end of the day, 78.84. So you lose a point on that trade. And again, that's why, if you're saying, okay, if I'm going to lose, let me lose small. If I'm going to be on the winning side, like you see over here, as we're trying to break out back in October, getting a retest, then a big flip where the stock goes up some 15 points over the next couple of weeks. That's what I want to be a part of and want to have you be a part of. You can see on the downside how Alibaba was moving down, giving you multiple retests, never breaking that until we got that next retest and that violation above that high, 66.89. Again, we could talk these numbers all day. It's all about finding the precision entry so you know exactly what you're looking for. Now let's scroll down a little bit and say, okay, guess what also appeared on the list? AAL. That surprised me a little bit at first, but I was like, you know what, oil has been stronger than even I would have expected here in recent times. We'll look at oil next. But let's compare that. This is American Airlines, of course. We've got a bearish signal on AAL a few days ago. You can see why. It's breaking down, and then it's following through to the downside. So, you know, it's bear confirmed there about 37 bucks. You see it's just continued to trend down. So you've got all these things kind of happening. You say, oh, but there's some old support there. That's true. So 35-ish probably would be your first target for that kind of a move. But it makes sense why the airlines are doing poorly, because you look at oil prices here, and they've been doing the opposite. They've been making a nice comeback. Everybody left oil for dead, appropriately so in the past. We were pointing out oil's bearishness all the way back to this move in the summer and fall of 2014. You see, look at what a good oversold trend looks like. Continued persistence on the downside, several retracement retest points along the way, and when it finally ends, you hop out. Then you kind of wait it out until you get your next signal. The next signal on this one was bad, and you got a quick stop out, got a brief rally phase, but guess what? Then you got another big acceleration decline on the downside where USO, the oil ETF, went from you see the entry there at 18 1/3 to a low at 12 1/3. Unbelievable. Another 1/3 haircut in the price of oil. And that wasn't it. You see we went down even more. But now we've kind of flipped the script here, and you see now we broke out, got to follow through. Now we're getting the acceleration bands kicking in. You see the last retest there on Monday was 1047. You think, well, why would I mess with something that's that low dollar? Well, you know, because again, 1047 to 1127, that's 80 cents. That's in the neighborhood of about a 7.5% move in oil just in the last 3 trading sessions. You know, so again, you can convert that into an option strategy of your choosing and your preference. And so, you know, from this perspective, we say, okay, you know, and I'm not sure what our time limit is here, so I want to mention to you something about how you can take advantage of this, and I want to go into some more kind of examples. If you want to type in a symbol you want me to look at, let me know, and I'll do a quick lightning round here depending on how much time we've got. So basically what I want to show you though in the meantime is we set this up to make this incredibly accessible to you as a fellow trader, to allow you to see what my top 3 indicators are saying each and every day, and telling you which are the best stocks, and that's the ones you want to consider converting into options, okay, option strategies. And usually it'd be 99 bucks a month, or we call it our Big Trends daily scans. But actually we've set it up now where you can take advantage of this on a 1-month auto-renew. That means after 30 days it would auto-renew if you don't tell us to cancel it. You can tell us to cancel it anytime before the 30 days are up. But at 49 bucks a month, it's just easier for everybody, if you like it, to just stay with it. If you don't like it, we give you multiple emails and toll-free 800 Big Trends number if you have any desire or need to cancel it or put it on hold if you're traveling or whatever. But you know, bottom line is that, look, 1 month at a time for 49 bucks, that's going to give you basically the next month's worth of opportunities. And every day you're going to get my top 3 bull and bears across 3 different strategies. That means percent R is going to give you 6 ideas, CCI is going to give you 6, and acceleration band is going to give you 6. Sometimes they'll overlap and you'll see the same name on multiple scans. That can be powerful to look for that as well. So I'm giving you half off of the usual 99 bucks a month price as a inspiration member here today. So basically make sure to take advantage of that for just 49 bucks per month on a monthly auto bill. Also, by the way, I've gone pretty fast, I know. If you want to get my top 3 indicator boot camp, this actually walks you through 5 hours plus worth of content from me on all my percent R lessons and secrets, the acceleration bands techniques that I teach, and the commodity channel index. The top 3 indicators I shared with you here today in this quick initial introduction, you'll get the in-depth top 3 boot camp, and that's lifetime access. Usually that would be 299 bucks. I'm allowing you to add it to your scans purchase, and for an extra 100 bucks. One-time $100 investment gives you lifetime access to those top 3 indicators, plus you get dedicated email access to me and my team. If you've got questions on the material, we give you a specific email. You can ask any question about the structure of the training and making sure you understand it. Now, you know, what I want to show you too, okay, I'm getting a few symbols in here, so I'm going to show you that quick little lightning round. But first, I just want to remind you too that I also include a daily scans training session. And that's going to give you also to understand not just what the email looks like when you get that, but also how you can go ahead and be ready to take advantage of your member side access and you say, okay, well, gee, what were the names that are popping as of last night's close? So you could pop in and say, okay, you guess what? Gold. We had gold on the list yesterday. Guess what? Pretty good call because it had a great day today for the gold and related stocks. You can see, some of the other names that are popping there. Again, airlines and more airlines. You see that coming up with multiple stocks in the same sector. You should pay attention to that. You can see also some of the stocks, even in a tough market day, we've been having stocks like Norfolk Southern that's been doing a real nice little uptrend. And again, coming in for a little retest, and again, the market was weak here today, but the bottom line is that, that stock's acting, the railroad is acting a lot better. Again, even in the face of some firm energy prices.
Hey, Michael, don't mean to interrupt, but you got a little bit less than a minute left.
Okay, thanks. I wasn't sure. So basically, quick little look here on a couple of names. Just Facebook, of course, on everybody's mind. The big gap up today. Wouldn't touch it right now. If Facebook's been very good to me in the past, some of the past times where we've seen the really great rallies, but you know what? You've got to wait until you get the follow through here. So from this perspective, we would really wait on something like that. ACAD, a couple of quick ones, and then I'll just remind you where to go to get all my dailies. Guess what? ACAD looks pretty good. It's coming in for a nice little settling retest here. It's been hovering around the long-term trend line, but for now, a pretty good profile, and then you watch your retest and you wait. And then the last one, someone asked about IOC. The only problem on that one is just you're right into the long-term resistance. So it looks okay on 2 of the 3 indicators, not quite where you want it to be. So appreciate that. And again, if you want to get even more access, all you got to do is go to bigtrends.com/dailyscans. Check out that 1 month at a time, $49, half off of the usual $99. And it is an auto renew, so make sure when you go through and you add it to your cart, you'll see that in there, and then you'll note that you can also add on the cart if you want to get the lifetime access to the top 3 indicator bootcamp training. That's just an extra $100. Usually that's $300, so you're saving 2/3 off of that one today. So either way you want to go, $49 at a time or the special with the bootcamp, you choose. Hit the green checkout button and it'll walk you through what you need to do with your credit card. So I don't want to hold Reed up. I will go ahead and hand it back to him. I thank you all for being with us, and you can also call us on that page, the Daily Scans, bigtrends.com/Daily Scans page. Top right corner is our 800 number. If you can't remember, just remember it's 1-800-BIG-TRENDS.